Well, good morning, good afternoon, or good evening, depending on where in the world you are joining us. I would like to welcome you all to this Brookings hosted event, formally titled Digitalization and Digital Skills Gaps in Africa, which serves as the anchor for the formal launch of the Brookings Development Policy Research Unit joint working paper with the same title. My name is Harun Borat. I'm Professor of Economics at what I call the most envious view you're likely to see behind me of a University of Cape Town in South Africa, and also Director of the Development Policy Research Unit. We are, with a group of my researchers, very pleased and honored to have worked together with Brookings to come together and produce a report which I hope you will enjoy reading or going through and listening to today with respect to understanding digital skills gaps in Africa. If I could just proceed perhaps with a few introductory remarks before handing over to colleagues. For me, I think a lot of the debate, a lot of the policy thinking, dare I say even some of the media discussions, perhaps need to move in a slightly more nuanced direction in 4 areas, which I'm hoping that the report has partly taken us towards. And those 4 areas are, firstly, to think about digitalization or the digital skills gap or the digital divide in a far more nuanced way. By that, I mean, it is not sufficient to simply focus on the digital divide as if it's a homogeneous concept. The report you'll hear now will reflect partly on that. We'll talk about drivers of the digital divide or the new digital economy, or the role of technology at various different levels. So in other words, we'll look at digital infrastructure, digital finance, digital participation, digital skills. All of that will come together in a far more heterogeneous assessment of digitalization. So for me, that's the first key thing, which is far more heterogeneity in the discussion. And in fact, what that leads to, I'm still on my first point, is that if you're talking about digital skills, that's a completely separate discussion from digital infrastructure. And one needs to be sure that that's the component or the area of digitalization that you're talking about before policy proclamations can ensue. The second is what I call, across a range of indicators and let's call it discussions around different development agendas, is the preference or the importance of second order versus first order indicators. What do I mean by that? Let me take the simple one. We hear time and time again that primary school enrollment and secondary school enrollments in sub-Saharan Africa have gone up. What we don't talk, that's a first order indicator. What we don't talk about is the second order indicator, which is how many STEM graduates are there in sub-Saharan Africa. And in fact, that's a number that's far more important. It's a far more second order indicator. Another second order indicator is access to the internet in sub-Saharan Africa has increased dramatically, but the internet usage gap is still significantly large. That's a second order indicator. Broadband access has grown dramatically in sub-Saharan Africa, but the price of broadband is incredibly high in some countries. That's the second order indicator. So the extent to which we focus much more on second order indicators that'll again guide policy is really important. The third area is around regulation. And I'd like to, looking ahead to the panel that we will have, almost a sort of teaser for my panelists, is to what extent can we think about the state, perhaps if I could put it in a devil's advocate sense, seeing a large part of the digital infrastructure, here I'm principally thinking of telecommunications, as a new revenue source, the new sort of license-based industries that the state can rely on revenues and then actually abuse for not for good, but in fact used for irrelevant expenditure that doesn't fulfill development needs. So to what extent are we thinking about regulation in the digital world in the same way that licensing has occurred in mining, and the abuse, if you like, of licensing revenues is really important. And the final point about digitalization, the digital divide that we don't think enough about, is the role of firms and the extent to which firms and the supply side of the economy in sub-Saharan Africa are both able to upgrade technologies to pursue growth, or to what extent do existing constraints, whether it's the price of the internet or digital services, skills, right, or available infrastructure that serve as a constraint on firms' productivity. That, for me, is a really key area of economic growth that we need to think about relative to other regions, developing country regions such as Southeast Asia. But with that, let me stop, and I'm going to hand over to continue in our introductory remarks to Landry Senior, who I won't introduce, and he'll introduce himself. Over to you, Landry.
Thank you very much, Aaron, for a wonderful welcoming remark and introduction. Hello, everyone. I am Landry Senior, and I'm a senior fellow at the Brookings Institution Global Economy and Development Program and Africa Growth Initiative. And I'm very pleased, very excited to be with you today to share some of the findings of our broader research program on digitalization and digital skill gaps in Africa. So let me start by acknowledging the contribution of our colleagues at UCT, at Brookings, the external reviewer, for the incredibly wonderful work which has allowed us to be with you today. And I have a statistics, a number. Between 2015 and 2035, about 450 million young Africans will reach the working age, will be able to enter the job market. So that's extremely important. Out of those young people, about 5% will have top quality work and could sustain a great livelihood. About 20% additional people will have an average quality job, and the continent will remain with about 75% of young people who will be either self-employed or are likely to be in quite vulnerable, informal works and having those type of jobs among other. Even the digital transformation, the fourth industrial revolution, the velocity, the incredible speed to which we see tech adoption, it is extremely important to think about the future of work and to think also about the strategies that we can use to bridge the skills gap in order to provide to those young people a better livelihood. Broadly speaking, so the spread of digital and emerging technology is changing the nature of work, not just in Africa, around the world generally, with disruptive effects on economy, on the effectiveness, and on development. So if I just look at some broader statistics, global export of ICT services increased at an average annual rate of 8% between 2005 and 2016. And it is clear that e-commerce alone represented a revenue of about 25.6 trillion US dollar in 2018. So African economies really have a very limited, thus far at least, digital, let's say, footprint in terms of global trade. If you compare, for example, and I hate comparing 55 countries on one hand with a country like China, but China alone make up for about 23% of total e-commerce trade, while the top 10 advanced economies made up about 75%. So it is extremely important, therefore, to assess, and as Aaron mentioned, we have numerous dimensions. We have the heterogeneity, but you also have the role that firms can play, which is really important, especially as less than or about a third of Africans have access to internet connections. And in most countries, less than 10% have access to digital or bank payment system. This has been increasingly addressed with mobile payment among others. Shifting, we really think that with the emerging technologies associated with the fourth industrial revolution, with digital transformation, high-speed broadband, big data, the Internet of Things, artificial intelligence, cloud computing, amount over this an opportunity if policymakers addressed key challenges to make substantial improvement. So the prospect could be quite positive, and these are for many reasons. First, digitalized markets and platform have the potential to reduce matching and coordinating problems. For example, allowing small and medium African enterprise to sell their products, whether within the continent or abroad. Another point, second point, which is critical also, is the non-rivalry nature of digital information, with significantly reduced marginal cost of extending education, thus democratizing, if you can use the word, access to knowledge, to data, and potentially enabling inclusive growth. Third, digital technology also could strengthen economic integration by bridging structural gaps across sectors and geographies, including between urban and rural economies. And finally, digital technology that are also fueled by big data could be guided by smart algorithms and improve resource efficiencies while reducing pollution drastically. As you can imagine, I am incredibly excited to discuss the questions related to digital transformation, the fourth industrial revolution, on which my book will be released next month, Africa's Fourth Industrial Revolution. But for now, I want to pause to give the floor to Dr. Aloysius Orju, the Senior Fellow and Director of the Africa Growth Initiative here at Brookings Institution, at the Brookings Institution. Thank you very much again, and looking forward to continuing the conversation with all of you.
Thank you very much, Brother Landry and Harun. It's great to be launching this report after the work that DPIU has done jointly with us at the Africa Growth Initiative at the Brookings Institution. My name is Aloysius Ordu. As you just said, I'm the director of the Africa Growth Initiative at Brookings. A word or two about the Africa Growth Initiative itself. Our goal is really to inform policy for better development outcomes in Africa. And this report is designed to do just that in terms of achieving our goal. How do we achieve those goals? Through rigorous economic research of this kind we're discussing today, through convening African voices and with high impact events here in Washington, across the world and across the African continent, by also helping to strengthen the capacities of think tank partners. As we speak, we now have about 25 think tank partners that work with us across the African continent, of which DPRU is one of them. The digital economy work is at the very heart of AGI's strategy. Other areas of our strategy include development financing, climate change, jobs, trade and economic integration. Today's report is typical of the close working relationships that we have in AGI with the DPRU headed by Haroon in Cape Town, South Africa. About the report itself, you already heard from Landry and from Haroon as well. Africa, our continent, across the continent, the information technology revolution is gaining momentum. That's what we heard. Even in remote villages, individuals now have access to cell phones. In fact, today, cell phones are as common in South Africa and Nigeria as they are here in the United States. The technology revolution is impacting the way we work, the way we study, and indeed the way we interact with urban folks and folks around the world. Yet, within African countries, the technology revolution has not spread as far and as wide as we would all like to see. There are digital divides across gender, geography, age, and income. In Africa, we run the risk that the technology revolution is leaving some people behind. This is a key lesson from today's report, that South Africa, the most advanced country on the African continent, has a huge digital gap vis-a-vis countries in the OECD. This finding raises the question, what to do to bridge the digital divide? For Africa's policymakers, here are some things to do. It means that investments in infrastructure, particularly ICT broadband, remains a priority. The African Development Bank estimates that Africa needs to spend about $130 billion a year to close the infrastructure gap. You see, without electricity power, you cannot charge your phones. And you certainly cannot connect to the internet for jobs. That also means that investments in education, in health, are vital to skills development and job creation on the continent. Because digital technology enables businesses to be more productive, it enables people to find jobs and better opportunities, it enables better service delivery by our governments and by firms. Another lesson from this report, which Haroon mentioned briefly, is the whole notion of the importance of data. Data on the level of digitization within countries and between countries in Africa. Data on the demand and supply of digital skills and soft skills. Data on African countries vis-a-vis other countries of the world. And data governance to assure the security of people's online activities. So for us in AGI, this report is timely and it's a great deal. It means a great deal to us. First of all, the study confirms the robustness of the AGI's framework, which was developed specifically to be tested in South Africa, which you hear more of today. Second is that it raises some important challenges and opportunities. Funding permitting, we would like to apply the digital skills framework to other African countries, Kenya, Rwanda, Nigeria, Ghana, Senegal, Morocco, and not to forget the heterogeneity on our continent. We need to apply this framework to low-income countries and indeed fragile states across the continent. So we plan to disseminate the findings of this report very broadly. For now, though, I'm delighted that we have assembled an impressive array of scholars and practitioners for today's events. My special thanks to Haroon and Landry and our teams in AGI and DPRU for the hard work in bringing us here today. And I also want to make a special thanks to our audience, online audience, including our funders and supporters for making time to be with us today. I'm looking forward to a very rich conversation. Now, here's what we're going to do in the rest of the time we have. Viewers who have questions for our panelists who will be introduced shortly can submit those questions by emailing events@brookings.edu, or those on Twitter could use Twitter at Brookings Global using the hashtag Digital Skills Africa. Let me now pass on the baton once again to Harun for the first part of this, which is measuring Africa's digital divide, digital skills gap. And then thereafter, we will move to a second segment where we'll be talking about the digital, bridging Africa's digital skills gap. Landry, over to you.
Thank you very much, Mr. Chair, for giving me the floor. So for this section of the work, we are very excited to bring some of the brightest young African brain who have made a phenomenal contribution to this work, leading many of the key aspects of the work to share the findings. So let me introduce them. So we have with us today, Zahi Asmar, who is a research officer at the Development Policy Research Unit at the University of Cape Town, and has previously worked also as a researcher for the Human Sciences Research Council's Economic Performance and Development Program. So we also have Jabulile Munakota, who is also a junior research fellow at the Development Policy Research Unit, still at UCT. And of course, she has interned before becoming a junior analyst and a junior research fellow. So she has an extensive experience there, and Bright has written numerous reports for the South African Department of Small Business Development, the Department of Higher Education, among others. And we finally have Chris Rooney, who is also a junior researcher and has obtained his business science and economics and master in applied economics from the University of Cape Town. Has done extensive work with the Department of Labor, the World Bank, UNDP, among other, contributing to a key report which has helped setting the national minimum wage in South Africa. So I took a little bit of time to introduce them a little bit more, simply because I think it is important to show the rest of the world that we have incredibly bright minds, scholar, thinker on the continent. And without taking longer, let me give the floor to Zahi.
Okay, thank you, Landry, for the introduction. Just shared my screen. Yes, so this is the report. It's called Digitalization and Digital Skills Gaps in Africa, an empirical profile. I'm going to first run through an outline of what we'll be going through today, and then we'll proceed with highlighting some findings of our report. So I'll be starting off with an introduction, then I'll pass over to Jabulile to take us through the methodology and results of the Digitalization Gap Index that we've developed for Africa. We will then pass over to Christopher, who will give us some insights into how we can measure digital skills supply and digital skills demand using labor force survey data, and highlight some issues with the data availability in that regard. I will then go on to speak a bit about policy to set up the themes and highlight some themes that will be discussed later on in the session today. And then I'll just end with some concluding remarks. So to start off with, why is this an important study? So increased digitalization has resulted in shifts in the nature of the function of labor markets on both the demand and supply sides. And this is something that's been looked at around the world, but much of the focus on this relationship has been on the developed world. So research on measuring and understanding the nature of this relationship and the nature of the gaps that exist have been particularly limited for Africa and other developing economies. And this is important also because we can't just take the results of the studies that are being done for other regions in the world. We need to understand the particular context that exists in specific countries and specifically in Africa, which is the focus of this report. And some of those unique characteristics are the high rates of self-employment and informal employment. So this presents a unique labor market to consider how digitalization and its impacts will be felt in such an environment. Another important factor about why this is important for Africa particularly is the demographic changes that are happening around the world, and the fact that Africa will make up 1/5 of the total workforce and around 1/3 of the total youth workforce in the world by 2030. So this is a substantial increase in the youth population engaged in the workforce. And with the advances in technology, in digitalization, it's important that they are plugged into digitalization and obtaining the correct skills to thrive in such a world. And we've got increasing mobile phone subscriptions, internet availabilities. There are innovations in mobile banking increasing within the region. And in the future, digitalization will only play a bigger role in how labor markets and ultimate economies function within the region and globally. So within this context, what does this paper set out to do? And there are three key questions that we at least try to consider as a starting point. We know there's a lot of work to be done and a lot more to consider. But as a starting point, we look at how can we understand the level of digitalization in Africa? To what extent the level of digitalization in Africa ahead or behind that of other regions? And then how do we measure digital skills demand and supply and the skills gap? And how do we do that in the context of low data availability? And so Jabulile will next take us through her index, or our index, which will look at the first of these questions, which will consider how do we consider the level of digitalization in Africa, and to what extent is digitalization in Africa behind other regions. Chris will then later on consider how we use labor force survey data, a case study about South Africa, to measure the demand for digital skills and the supply of digital skills, and what that can tell us about a skills gap in Africa. So I'm going to cross over or hand over now to Jabulile to take us through the results of our digitalization index. Thanks. Jabu, I think you're unmuted.
Jabulile, can you unmute, please?
Oh, thank you. Thank you, Zeg. And through the World Bank's foundational pillars of the Digital Economy for Africa initiative, they propose a series of 5 dimensions of digitalization. So we follow the same analogy to inform our digitalization measure. Firstly, digital infrastructure, which is important for individuals to engage in digital services through access to high quality broadband infrastructure. So this dimension is made up of fixed telephone subscription, mobile cellular subscription, secure internet service, and individuals using the internet. And secondly, digital entrepreneurship, which measures the ability of entrepreneurs to easily explore new products and opportunities in the digital space. This dimension is made up of venture capital availability, ease of access to loans, and ICT service exports. Thirdly, digital finance captures the availability to use financial services by individuals and households, allowing them the opportunity to pay, save, and borrow. So this dimension is made up of account ownership at a financial institution or mobile money service provider, use the internet to pay bills or to buy something online in the past year, and made or received digital payments in the past year. Fourthly, digital public participation reflects the use of digital technologies to facilitate government's digital engagement with citizens. This dimension is made up of online services index and e-participation index value. And lastly, digital skills dimension, which measures the skills and education required to actively participate in the digital ecosystem. This reflects the availability of a skilled workforce to support the development and use of digital technologies. So this dimension is made up of secondary gross enrollment ratio, tertiary gross enrollment ratio, mean years of schooling, and internet access in schools. Next slide. Next slide, please. Okay, so the study proposes the digitalization gap index using the Alki-Foster method, which is widely used in poverty studies. So we look at 21 African countries relative to G20 countries between 2011 and 2017. The study primarily uses data from World Bank database and United Nations. So the digitalization gap index is constructed based on the 5 dimension and is made up of 16 individual indicators. And this can be represented by this function. So we then calculate the mean values for each dimension for Africa in period T. Then we take the mean values to calculate the normalized gap, which is the deviation from the digital vulnerability line. This is represented with the following formula, which is the mean for G20 countries minus mean for African countries, all divided by G20 mean in time T. So the matrix is then censored by replacing all negative elements with a 0. And negative elements are an indication that a country is not vulnerable in that dimension. Then finally, we calculate the average of the dimensions to get our digitalization gap index. Okay, so next we provide a snapshot of the 5 dimensions for Africa relative to G20 countries between 2011 and 2017. So in terms of digital infrastructure, there's high endowment of digital infrastructure for Africa for mobile subscriptions and individual internet usage relative to fixed line infrastructure. And in terms of digital entrepreneurship, there has been steady progress towards providing enhanced access to entrepreneurs and firms in terms of venture capital, financing, and access to credit in the African market. So access to venture capital is surprisingly close in ranking at 2.5 to that of the G20 countries at 3.5. Access to loans has also improved significantly in the region from a rank of 2.5 to 3.3 over the period. So this is still below the 4.3 rank score for the G20. So in terms of digital finance, there has been a growth in usage rates in Africa, indicating some progress towards enhanced digitalization in the region. So 45% of all individuals had a financial services account, which lags behind the G20, which is 82% reporting to have an account. So using the internet for online transaction in Africa is rare, with 80% of individuals report using the internet for those purposes, while over half of the G20 population report making online transactions. And in terms of the digital public participation, African governments lag behind G20 government for both the online service index and e-participation index, but it has been increasing over time, which shows some improvements in government's engagement with their citizens in Africa using digital technologies. And the final component of the ecosystem is the availability of skills that are required to make use of digital infrastructure and digital public participation. So the mean years of schooling in G20 countries reach an average of 10.6 years, which far exceeds that in Africa, which is like 6 years. So a significant number of African students do not progress beyond primary education. Hence, tertiary gross enrollment ratio for Africa stood at 15.3% in 2017, compared to 65% in the G20. So the share of schools with internet access is surprisingly low for both Africa and the G20, but this could be a data coverage issue. Next slide, please. So next, we apply the Alki-Foster multi-dimensional poverty index methodology by combining these dimensions into a single measure of digitalization at the country level. So the table provides the headcount index for Africa relative to G20 countries. Well over 90% of all African countries in the sample fall below the G20 mean for all their dimensions. So for example, the data shows that 100% of all African economies in 2017 fell below the mean of digital skills achievement for the G20 countries. So now looking at the relative vulnerability index, we can observe a decline in relative digital vulnerability in all dimensions except that of digital entrepreneurship. Hence, the average digital score for the aggregate digitalization index has improved despite being below the G20 mean. Almost all African countries in the sample lag behind the average G20 country across all dimensions of the index. And digital skills in particular is the one dimension in which no country in the sample meets the G20 threshold mean for both 2011 and 2017. So this begs for policy intervention to prioritize this area in Africa. Next slide, please. So what is the percentage contribution for each dimension to the overall digitalization gap index score? So digital infrastructure is the key contributor and driver of the aggregate digitalization gap, contributing 26% of the digital gap index. Digital entrepreneurship have contributed less over time to the digital vulnerability. And we also observed that the contribution of digital skills has increased over time from 17% to 19%. Next slide, please. We now tend to examine digital gap scores by country to see how each country compares with the G20 countries. So these scores are deviations from the mean score for the G20, meaning higher scores indicate poorer performance. So upper middle income countries are doing better than lower or lower middle income countries. So the countries with the poorest overall digitalization performance are Niger, Malawi, and Madagascar, while Mauritius, South Africa, and Tunisia have the lowest digitalization gaps relative to G20 mean. So to provide, next slide please, to provide more specific information about the indicators that can explain the overall digitalization score, we present the digital gap scores for each country. So indicators which are further away from the vertical line reflects vulnerability, and those on the line are not vulnerable. So the digital gap score is the largest for the digital infrastructure and digital finance dimensions for the most vulnerable countries, which is Benin, Malawi, and Niger. And most African economies perform relatively well in terms of digital entrepreneur, with the exception for Zimbabwe. Last slide, next slide, please. So lastly, we present a comprehensive breakdown of the digital skills dimension. So we see that almost all African countries in our sample lag behind G20 countries in terms of all the digital skills indicators. And the tertiary gross enrollment ratio is furthest away from the vertical line for most countries compared to other indicators. So to provide us with a better perspective of how we can measure the demand and supply of digital skills in specific countries, I now hand over to Christopher to present a South African case study.
Thank you, Jabu.
And just to the audience, apologies, Chris will present without showing the video. So that's another illustration of the digital challenges some of the digital challenges that we are facing on the continent with the bandwidth. Yes, Chris, you have the floor.
Thank you, Andre. So obviously when we're looking at skill gaps, we look on one side, the demand for skills, and on the other side, the supply for skills. With regards to the demand side, we will base it on the methodology of Muro et al., who calculated digital skill for each ONET occupation. And they identified two ONET task variables: knowledge, computer and electronics, and work activity, interacting with computers. Now, for each ONET variable, the level and importance are provided. And the level refers to the complexity of the skill in the occupation's daily course of events, while importance is how critical the skill is to complete day-to-day tasks. Now, because level and importance use different scales, we standardize the scores. And once we standardize the scores, we derive a digital skill in the following way, which follows Muro et al. Next slide, please. So to give you an example of how we calculate this score, we use a computer systems analyst, and C4, we have the knowledge level, knowledge importance, work activity level, and work activity importance scores. And then I've done some workings there which base standardization. and we calculated a score there, overall digital score, which is 78.4. So what do all these digital scores mean? Can you next, please? So again, using the Mural et al. Threshold, the standard we consider occupations 60 and above have a high digital skill level, 34 to 60 a medium digital skill level, and 33 and below have a low digital skill level. And I've given some representative occupations to think about which ones, what could indicate each level. And in the high category, we have computer programmers, electrical engineers, and geologists and geophysicists. In the medium, you have data entry operators, hotel receptionists, and financial analysts. And low, we have plumbers and pipe fitters, building construction laborers, shoemakers, and related workers. Now, once we've calculated all the digital skills for each occupation, and it is based on US occupational code, it is necessary to perform.
Chris, would you mind if you, when, I don't know, sometimes you have some small difficulties listening, if you can just speak on, perhaps in the same position, closer to the mic, please.
Okay. Can you hear me now?
Perfect. Thank you.
Okay, great. So once digital skills are calculated for each occupation, it is necessary to perform a crosswalk between the ONET occupational codes, which are US occupational codes, and the South African labor force data. Next slide, please. So here we show the employment shares by digital skills intensity in South Africa. And the overall message is that digital skills intensity has increased over the decades. The employment share of those with a low level of digital skills decreased from 47.6% to 31.6%. And in contrast, occupations requiring a medium or high level of digital skills increased by 9.1 and 6.9 percentage points, respectively. Now, there are two potential explanations for this shift. Either current occupations require more digital skills, or the occupational distribution is shifting towards jobs requiring a medium or high level of digital skills. Now, in Mural et al., they found the first effect is substantially larger than the second effect. And this is likely to be the case in South Africa as well, which has a far less developed labor market than the US, thus limits the opportunities for new occupations to become dominant. Next slide, please. This looks at the mean digital skills intensity scores within each category. For the low digital skill tier, the mean digital skill increased by 2.2 percentage points. On the other hand, the mean scores for the medium and high digital skill tiers decreased by 1.6 and 0.2 percentage points, respectively. Next slide, please. This looks at the industry mean digital intensity scores for various industries. As you can see, the mean digital skill increased from 36.7 percentage points to 42.1. And this is an increase of 5.4 percentage points. All industries in South Africa experienced an increase in their digital score, with manufacturing, transport services, and construction experiencing the largest absolute increases, while the smallest increases were in agriculture, financial services, and community, social, and personal services. Can you go next slide, please? So we've looked at demand, now we look at supply. Now, this is a very challenging issue because generally there's a lack of data in Africa, and where data does exist, it is usually based on self-reporting measures or proxies, such as the position of certain devices, like a computer or a tablet. And an alternative to using a self-reported surveys is to use a level of education as a proxy for digital skills. And the key assumption here is that a high level of education attainment leads to a high level of digital skills acquired. And the one caveat here, which I must mention, is when we measure the supply of skills, we are including the entire population and not just those who are employed, as was the previous case with demand. Now here we we use the taxonomy of Bashir and Miyamoto. So they did the first two columns, and we used the South African equivalent there for the different South African educational categories. Next slide, please. So with regards to the level of digital efficiency, the supply is definitely increasing. A portion of the population who had only foundational digital skills was 50.9% in 2010. This decreased to 46.2 percentage points in 2015 and subsequently to 40.6 percentage points in 2020, and this is an overall decrease of 20.2%. Those with intermediate digital skills increased from 45.6% in 2010 to 55.6% in 2020, an overall increase of 21.9%. Although there's a big increase in those with advanced digital skills, it's also very low base. Next slide, please. This shows us digital skills by employment status. So mostly both between the unemployed and employed have foundational and intermediate digital skills. There has been a decline in foundational digital skills amongst both the unemployed and employed, and most of this increase has been accounted for by a proportionate increase of those with intermediate digital skills. The proportion of those with advanced digital skills increased by 2.1 percentage points compared to the marginally low increase of 1.6 percentage points for the unemployed. Next slide, please. Right, cool.
Okay, thank you, Chris and Jabu, for going through those results with us. I'm just going to close off our session by thinking a bit about some of the policy implications, but I won't go into too much detail because that will be the basis of our discussion later on. So I'm just going to highlight a few themes and some key results that need to be considered in terms of considering policy. The first thing is that it's very clear that the index suggests that many African economies actually, if not all, are lagging in terms of digital development. And importantly, we should develop all components of that ecosystem, those 5 dimensions that we have considered. But in our policy discussion here, we do focus on the top 3 contributors, and those are digital infrastructure, digital skills, and digital financial inclusion. So in terms of digital infrastructure, the index has confirmed that African countries lag G20 countries on indicators related to this. And this is a major problem because if you think digitalization, if you think about the ecosystem, the foundation on which all of that is built is the infrastructure. So with inadequate digital infrastructure, it will not be possible for African countries to reap the full benefits of digital transformation. And I mean, they won't even be able to use the skills. These things go hand in hand together. You need to develop the infrastructure and then start thinking about how you benefit from the ecosystem that is built on that infrastructure. At a high level, we can say that 2 key things to do are to address the affordability of broadband and then to ensure access to all groups. In terms of increasing affordability, we note that African countries are stronger in terms of mobile subscriptions compared to fixed line infrastructure. And that's encouraging. It means more people are getting access to the internet and being online, but fixed broadband should be a priority still to ensure that high-speed internet and affordable internet becomes accessible and that firms are able to digitize. It's important also to have reliable, cost-effective electricity and broadband as well. But we also do acknowledge that there's constrained public budgets and that, we'll have to think about how to do this. And partnerships with the private sector may be critical here as well. In terms of increasing access to digital infrastructure, it's important to ensure that no one gets left behind, whether geographically or specific vulnerable groups. There are a few things that governments can do to prioritize underserved communities, which may involve, for example, subsidizing losses of revenues for ICT companies. which may be raised by ensuring access for marginalized or poor communities. Also to ensure that strategies are put in place to prevent ICT companies from operating as an oligopoly and in a way that excludes lower income users. And then it's also important that universal access should be prioritized to ensure that Africans can benefit, and that any drive to improve digital infrastructure and connectivity does not leave anyone behind. Then the next key component that we want to discuss is digital skills. And we know that Jabu has indicated to us how important it is in the index and what has been found in terms of the lag in that regard. But importantly, we want to emphasize that different countries have different needs, have different constraints, and different operating environments. So appropriate country-specific interventions will be important to target development of specific skills in different countries. And any actions on the supply side must be coordinated and balanced with that access to infrastructure, digital platform, and as well as the stimulation measures to stimulate demand and participate in the global digital economy. Apart from a few more advanced countries within the sample as well, primary schools are unlikely to have the minimum infrastructure required to train effectively within the space of digital skills. So that's again is emphasizing the need for the skills to go along with the infrastructure development. And then again, we want to introduce the idea of the tension between trade-offs between different types of skills and education given limited resources. I mean, there's a digital skills that need to be developed at the basic cognitive level, and then there's also the higher level skills that are typically associated with STEM and post-secondary education in specific fields. I won't go into too much of this to taking account of the time, but we will get into the discussion about this later as well. The last thing that I want to talk about here is the digital finance dimension, and we've noted that this has the second highest contribution to the index. And we have seen progress in the use of and ownership of a financial service account, but it's likely fueled by the increase in mobile phone use. And there still remains a gap, even though there's been this increase in trend over time. But what is interesting about that and what should be considered is how the rise in mobile banking can be used to further formalize informal sectors through formal credit access and assessment using tools like AI, blockchain, and record keeping. And then this is where we also get into the issue of regulation and how governments should enable financial sector deepening by promoting regulation that addresses barriers. And just to highlight two of these sort of barriers. So governments can do this by promoting use of blockchain for financial transactions and establish a single identity for residents, which currently does not exist for about half of African countries. Governments should also address threats of fraud, cybersecurity, and high transactional costs. It's very important that consumers have trust in digital systems and feel that they're able to take advantage of digital inclusion and digital participation. And then I'm just going to end with some concluding remarks, which are related to the results that we have shared with you now. So again, I'm just going to highlight that the index suggests that many African economies are lagging in terms of digital development. Some indicators, such as mobile phone subscriptions and bank accounts, have shown steady progress. There have also been progress in digital public participation and digital finance dimensions. However, over 90% of the countries in the sample remain below the G20 mean in the aggregate. And it's African economies are at risk at falling even further behind due to significant gaps in infrastructure, technology, and skills. Again, we'd like to emphasize the need to tailor policies to local political and economic contexts, while also emphasizing the need for comprehensive strategies across nations, regions, and the continent. And again, to emphasize that while we're focused on the three key contributors, this must be thought of as an ecosystem in which all five of these dimensions interact, support each other, and produce returns in line with how they interact with each other. So it's important to improve all components across that digital ecosystem. But obviously there will be priorities and to identify the potential synergies and address potential barriers. between these competing priorities, leadership should develop and continuously update a comprehensive strategy that aligns these priorities. And it's important to involve multiple stakeholders and that this is a strongly coordinated approach. The successful outcomes of improved digitalization and reaping the benefits of digitalization in individual countries will be reliant on strategic prioritization, which focuses on local context and local constraints and takes into account appropriate measures to take account of those constraints. And then just one last thing we'd like to highlight is that while we believe this index can help guide these priorities and point out specific vulnerabilities and strengths of particular countries, the lack of data is a concern. As you may have noticed, our index looks at the years 2011 and 2017, and it's now 2023. So it is a bit of a concern that we do not have access to timeous and regularly updated data in respect of these dimensions and indicators. And so that is something to really take on board and think about. How do we emphasize and make sure we collect the type of data that we need to do the analysis and perform the insights and inform the policy that needs to be taken in line with those insights. I don't know if I'm going to pass over to Landry now, but I think we're a bit over.
It's a beautiful way to conclude the first session, Zahir. So I just want to let the member of the audience know that we will be starting in about 3 minutes, the second session. So if you want to take those 3 minutes to have a small coffee break or some water, and please join us exactly at the hour to continue the next session, which will be chaired by Arun. And after the next session, we'll have a broader Q&A session where you can also engage with our presenter of this panel. So see you in about 3 minutes. We are back now, so I will give the floor to the chair of the session, Arun Borat.
Excellent. Thank you very much, Landry. Welcome back, everybody. perhaps just so you have a roadmap of where we're going, I will open up a panel of esteemed guests who I'll introduce in a minute. And then once they've provided introductory remarks, I will try and do a sort of, as the phrase is, a redirect back to them individually with some perhaps elaborations on inputs they've made. And then we will go to you, the audience. So we have some questions that have come in already via Twitter, but they're also live questions that are coming in. And then I will try and sift through those lists of questions and hand it back to our panelists, but also to Zakir, who presented the sort of the core of the report today. Okay, so let's proceed. Let me do the following, if you don't mind, so we don't interrupt the flow. I'm going to introduce our panelists all at once and then hand over to them sequentially, so they will know the order they are going to speak, because that's the order I'll introduce them in. Our first panelist is Leslie Goh. She's the Senior Technology Advisor at the World Bank, and she was former World Bank Chief Technology Officer. So a strong link to the World Bank. She's a fellow at Cambridge Center for Alternative Finance and at Cambridge University's Judge Business School. She's a senior fellow at the National University of Singapore at the Lee Kuan Yew School of Public Policy. She's also a professor of practice at Zhejiang International Business School and serves on the advisory board for Harvard College Project for Asian International Relations. Leslie principally serves at the nexus of technology and policy and brings, as you can hear, extensive international experience, and she's worked in areas around AI, blockchain, Internet of Things, 5G, and so on. So please keep your questions ready for Leslie. She'll be followed by Cecilia Varend Masson, who is the CEO and founder of Talent Up Africa, which is an enterprise with operations in the US and Africa, with the goal of helping solve the global tech talent crisis and the laudable aim of unleashing opportunities for African talent. Dr. Masson is a postdoc at the Wharton School at UPenn and a fellow at the World Economic Forum, and she's previously worked as an associate at Morgan Stanley Wealth Management in New York. Our third panelist is Landry, who we know very well. He's a senior fellow with Brookings at the Africa Growth Initiative and a co-director of Globalization 4.0 and the Fourth Industrial Revolution Initiative at the Thunderbird School of Global Management. And he's also a distinguished fellow at Stanford's Center for African Studies. Landry served as a visiting scholar and has lectured at Oxford, Stanford, Georgetown, and others. As we know, he's strong on social media, so we've seen him in a fair number of sort of public global fora. Our final panelist is Alison Gilwald, who's Executive Director of Research at ICT Africa. We're very lucky to have Alison. I know she's squeezed us in between many events. And she's an African digital policy and regulatory think tank, is the ICT Africa, based in South Africa. She's an adjunct professor at the University of Cape Town's Nelson Mandela School of Public Governance, where she supervises doctoral students undertaking transdisciplinary research, obviously on the digital economy and society in Africa. Alison leads the Research ICT Africa team that provides technical assistance to the African Union Data Policy Framework and the implementation and capacity building plan of that institution. She was recently commissioned by UN Women to produce a background paper for CSW on RI's work on intersectional digital inequality and data injustice. Alison has advised the South African Presidency, the National Planning Commission, the Competition Commission, and the Independent Communications Authority of South Africa, and of course is involved in a wide variety of multilateral African agencies, and she's published widely in the area. So I think you'll agree with me that we have a wonderful panel to take us through some of the sort of burning policy questions around digitalization and digital skills and the digital divide in sub-Saharan Africa. So with that, I've given, the organizers have said 3 minutes. And as a speaker, I think that is criminal. So I'm going to give you between 3 and 5 minutes. And if you take a little bit more, but you're saying interesting things, please go for it. So I'm going to hand over first to Leslie. Thanks.
Thank you so much, Harun. What an honor to be among this esteemed colleagues, speakers from different parts of the world. I'm honored to be here. Last year was here as part of the AGI launch of the report, and I remember with fun insights on all the great things that that was put into the report, and congratulate you this year on another excellent report on a topic that's very close and dear to my heart around digitalization, and also around this whole topic on skills gaps for the future in Africa. So a lot of my work is about advising governments and policymakers and regulators to leverage digital technology in order to address sustainable development goals in many of the developing countries at the intersection of tech and policy framework. So I'm currently in Asia. I moved here about a year ago in Indonesia. And I've learned and I witnessed a lot of the digital transformation in government and private sector here in Asia, and more specifically in Indonesia. And lots of learnings from years of hard work over time that could be quite applicable in Africa. So a lot of the learnings also happens in Africa, such as Kenya, where some of the sectoral work around agriculture that we've spent quite many years since 2018 to really build the digital infrastructure in Kenya to support the digital transformation of agriculture. And I'm glad to share some of the reports that my colleagues publish at the World Bank around scaling up digital innovation in agriculture in Kenya and the region to support the effort on agriculture transformation. And what that essentially boils down to are some of the key elements that our colleagues have highlighted earlier, but I will double click on the areas around institutionalizing innovation and digital at the core in government. By that, I meant investment from the government on the to cultivate and the innovation ecosystem. Kenya, for example, set up the Digital Transformation Office for agriculture. And that happens at a very critical junction to really catalyze innovation and bring in more innovators and agtech and fintech innovators to come together. And since 2018 until now, there's 26 of them, and they've really grown over time. And with the effort of government and private sector support is one evidence of the great partnership between government and private sector coming together. And the other aspect is bringing these kind of private sector investment from Silicon Valley as an example. Ghana is a great example where MEST, the Meltwater Entrepreneur School of Technology, has really been a great shining examples founded by Jorn, who came from Silicon Valley and brought in not just the financial investment, but also the digital skills and capabilities, and inspire the young people and the innovators to really step up and try to address some of the challenges in society. In my recent mission in Ghana in April, I had the honor of meeting the founder as well as some of the innovators in this school. The last point I want to mention, since I want to keep it short, is around the government-to-government dialogues and capacity building. So I sit on the Singapore GovTech board for the last 5 years, and Singapore journey for digital transformation has been one that many countries are trying to clone, but yet trying to figure out it's not just a cut and paste, it's about truly raising the digital quotient in public service leadership, as well as the community at large and the young people, in order to give them the higher aspiration of what digital skills really mean to create greater jobs and opportunity for the young people. So I think it's a lot about how do we raise the aspiration in Africa and learn from other countries, perhaps in Asia, in Singapore, in Vietnam, in Indonesia, a few countries I work very closely with the government and the private sector to bridge that digital divide and help create a greater opportunity for all in the country. So I'll stop here to give time for my other esteemed colleagues to provide their insights as well. Thank you so much.
Wonderful. Thank you, Leslie. Over to you, Cecilia. Are you with us, Cecilia?
Yes, I do apologize. For some reason, I was pushed out.
Okay, but you're back in live.
I am back.
Wonderful. Over to you.
Perfect. Thank you. I apologize again. So first and foremost, wanted to say thank you for being invited to this panel. Indeed, it's a great honor to be part of this discussion on a topic so dear to my heart and so important for the continent. And secondly, I want to congratulate the authors for both a great report and a good presentation. So first and foremost, secondly, can you see the screen? Can you see what I'm sharing? Perfect, got it. So let me start with a few personal experience from my work on the continent. So if we start with the startup, I'm the founder and CEO since a few years ago of something we call Talent Up Africa. We work, as Professor Bard specifically said from the beginning, to help top talent from the continent get good remote work positions in the US. Finding top talent on the continent is very hard. It's harder to find the top talent on the continent than finding the companies in the US willing to hire those talent. Clearly, if, a report by Google and Accenture in the end of last year published that there's about almost 1 million within tech, only 20% of them are good, competent tech people. That's not enough. So clearly a problem with the digital skill here. I want to also note a few things from my research. So my research focused on how fintech solutions and mobile technology impacts microfinance in Africa. So think microfinance as social enterprises with two goals. They want to do well, increase financial inclusion, and they do want to make money. What happens to this balance when we have fintechs and when we have digital innovative solutions? Will the social enterprises, the microfinance organizations, be able to optimize both? Sadly, what we see, that's not what's happening. It becomes tensions between the two, and we see that microfinance will increase focus on finance. Part of the reason, the financial goal over the social goal, part of the reason is really going down to infrastructure problems in the most rural areas, but it's also going down to literacy, then going right into the point of this panel, problems with digital and financial skills. To cite a few other statistics, the report clearly did better in pointing out a few things. Few of the statistics, specifically, I would say that figure 1 and figure 5 were, I think, specifically telling. But we do know that 2030, about 1/3 of the world's population under 25 will be from Africa, and by 2035, it's forecasted that the number of people joining the workforce in the world will be majority from Africa. So if we don't deal with the skills gaps, skills challenges that we do know and been pointed out from the report and also it's clearly crucial. And where I think it's very important is where the government should really be an enabler to incentivize private initiatives such as our own initiative when it comes to finding good people, investing in people, outsourcing them. I also think it's important, Leslie also noted that before, that African countries learn from each other within the continent, but also look abroad. Look at India, for example. I just came back from the Baltics on looking at the e-governments with a group of Wharton students, looking at what can be taught from the Baltics on those small countries in African countries. Leslie mentioned a few examples from Kenya, and then I should probably leave it to the next panel. But also looking, what they did last year was looking at India, who very early on implemented mandatory coding schools in high schools. Kenya has done the same now. Clearly an important initiative to increase the digital knowledge from the very young age up, which clearly will become very, very important. Just final thing, which was also mentioned earlier on, very important to also think about the infrastructure, because we can do a lot of digital training and try to use digital computer to facilitate training, but without the relevant infrastructure, when it comes to Wi-Fi and internet, it doesn't really make sense. So I will end here in interest of time.
Thank you very much, Cecilia. Excellent, thanks. Landry, over to you.
Yes, thank you so much, Aaron, and thank you also to the panelists for the brilliant intervention. So I will not take a long time because I shared some preliminary remark earlier, but a few things that I want to highlight is that agile governance will be extremely important in aligning the various dimensions that we are discussing, and that agility in particular by African governments, because in order to align what we call the physical capital, infrastructure, the digital and technology capital. So to what extent government will be ready to adopt the technology, to what extent will they be able to build or help or support the environment to build the infrastructure, to what extent the human capital, whether at the primary, secondary, tertiary education, will it be possible also to align academic curricula to make sure that the skills which are developed are aligned with the future of work. And it's another dimension, the perception. All of this will not have the same impact. Everything that we are discussing will not have the same impact if there's not also a work which is done, which is made in improving, adjusting the perception, especially of the one who are very skeptical about technology, about the prospect for their jobs and for job creation among other. So, comparing also with some of the work that I have done with my forthcoming book, Africa's Fourth Industrial Revolution, but also with another paper I co-published with Louise Fox on how the Fourth Industrial Revolution whether the Fourth Industrial Revolution will bring good job in Africa. So it will be important for government to do a deep dive in the area with the highest potential. Not all the sectors are equal. So we found, for example, that in the service sector, through e-commerce or expanded tourism, we have the greatest potential of having an impact on jobs. Not just job creation, but also the quality of job in terms of improving formal wage employment, as long as, of course, as infrastructure, ICT, energy could be available. And it is also true that most service sector will relatively remain in low middle income countries, relatively small. So again, I can't expand. Perhaps there's so much to say here, to be said here, but I will pause here to give the floor to my colleague.
Excellent. Thanks, Landry. And I'll hand over to Alison, who rivals me with a wonderful background of Cape Town. Over to you, Alison.
It's a little bit more stylized. Do I share my screen or is it going to be shared?
Let's see if you can. If it says you can't, then the Brookings team will give you permissions. There we go.
Great. Let me just try
so if you
and get
put it into presentation.
Yeah, thank you. So Haroon, I'm really torn between sharing this data with you and responding to some of the policy proposals in the paper and using my 4 minutes for those. But let me share this with you, and I'll try and pop on some of those as we go along this. So I suppose, some of the things I just wanted to emphasize were really around the importance of the entire ecosystem and understanding the digital skills needed, or the skills needed in order to see the benefits of digitization across the economy and society, not just being, kind of digital literacy and these kinds of things that have tended to be focused on in policy. So really, I think basically our concern, and I wanted to sort of really emphasize what Zakir and others have said, is around the problems we have with this really very, very patchy data, making it very difficult. I mean, even the data that you're using from the World Bank is based on the ITU data, which is extremely patchy from Africa and is actually extrapolated from our 14 countries, which were done at the biggest number of countries done, 10 years ago, and these are extrapolated to 54 very different economies. So, or forecasted and assessed for those economies. So very, very problematic, this data. But I think the real outcomes is, the negative policy outcomes you've seen is, what we need to do about to understand that is we need to develop an evidence base, and it's very difficult to do it without that data. But what we do know is that despite the potential of mobile phones and the internet and all that's been spoken about to improve livelihoods and lives and indeed life opportunities, I think increasingly is important to point out, this is that we have this very patchy data, particularly as soon as we try to look at sort of disaggregated data. And the problems with using the disaggregated data that is available is that, if it's not kind of modeled and understood properly, it often produces these homogenized disaggregation that really doesn't speak to inequalities and differences in those different urban or rural, female, women or male. So I think we've been part of a group, it's part of our UN Women work that we've been doing, it's part of the work we've been doing with UNCTAD and ITU, is to really lock into the idea of getting data accepted as a public good and funded as this, and really developing kind of decent public statistics as we move increasingly into these digital and data economies. And I think the pandemic really highlighted the compounding effects of digital inequality on structural inequality. Of course, the structural inequality creates the digital inequality, but the compounding effects was the inability of most Africans to digitally substitute to mitigate the devastating effects of the pandemic, and of course the limitations now for economic reconstruction and economic development. And as has been mentioned, and as the background of shows, is that it's very difficult to assess the progress we're making towards the SDGs, other than we know we're very far off. And I think when you look at that data and you see, there's kind of a mention that there have been improvements and that governments are kind of getting this right better and stuff. But if you actually look at some of those figures, and I'm really not a statistician, but these are very marginal improvements over very long periods of time in Africa. So, these lags really are getting worse. So we just, we can't carry on doing the same things and hoping for different results. We've got to do things differently. And I think that really requires us looking at this entire ecosystem. And also, really, this is not a sectoral policy anymore. This is not sectoral. This is transversal policy. This cuts across the economy and society. We need coordination between the public and private sector. We've seen the devastating effects of, private sector-led public delivery of public goods without effective regulation. What we need is we need the public private investments in these public infrastructures, but they need to be more effectively regulated than they have been in the past. And this really requires, you'll see from the data, it's not really, digital skills are kind of one of the outputs of education. The main factor driving internet take-up and more equitable use is actually education. And so the development of skills and training is not only in the citizens and consumers that we need in order to grow these economies that we've got, kind of digital consumers in it, but of course in the companies and the higher level skills that have been spoken about in this report. But it's really important to understand the importance of education and training and skills development of this entire ecosystem. So we really need to develop, policy and regulatory understanding of this very new area that people are struggling with all over the globe. But we have these institutional capacity legacies that we have to address. So really important just to address the whole thing. Where's my forward arrow? Because I've now spent far too long. So I just wanted to say this is just actually a infographic that we developed for the African Data Policy Framework. And don't look at all the guidelines because it gives all the sort of very high level principles. But if you look at this enabling environment, you'll see that there, unlike other data policy frameworks, there's the first thing that says we need this foundational infrastructure. And that foundational infrastructure, as I said, is not just broadband, which is often implied and might be even implied in this report. We're now really talking about digital IDs. We're talking about, data infrastructure, so data warehouses and those kinds of things. Those are what are going to be necessary to drive the next sort of levels of digitization. So, and then we speak about public data, value creation, also developing public value, and we have to look at coordinating trade policy, competition policy, the regulators in all these sections, new information sector regulators. So this capacity development is really across an enormous set of skills, which I've only just sort of really just highlighted there. I'm just saying this is the digital ecosystem is the current digital economy in society, is the current economy in society. And yet we're still dealing with this fundamental wicked problem that we've faced for so long, the digital inequality paradox that the UN Secretary General has described as one of the seismic shifts together with climate change that will determine levels of quality and inequality reduction over the next future. And really, so I think the important thing about this is that we've often reduced this to a digital divide. And, that worked for a kind of telecom environment. And of course, connectivity is a precondition of digital inclusion. But connectivity on its own really doesn't address digital inequality. What does is education, skills development, et cetera, et cetera. So that's really where we need to focus some of the policy attention. But the paradox is in the fact that as we connect more people, digital inequality is increasing. And I think there's a lot of evidence of that. But importantly, as we move into this datafication, the data area, not digital anymore, is it's not only between those who are online and offline, which we knew was the case in basic voice and text environments, but it's also between those who've got the technical and financial resources to use the internet productively and even prosper, at a national level, and those who are barely online, eking out an existence, unable to have, don't have the skills to transact effectively or to defend their rights or, create businesses. So shifting these policy outcomes really requires not only supply side interventions, but very much demand side interventions. And this is not just sort of, digital literacy and development, as you'll see. Just very quickly on your one of the policy points. So, as I said, we need to speak about digital infrastructure much more broadly than we've spoken about it before. It's not just broadband; it's also these other, data centers, all these sort of other things. But just speaking about broadband connectivity, many countries in Africa have 90%, 95% broadband penetration. So your point about maybe there's not coverage actually doesn't apply to many places. It might apply to a rural school. That rural school will have coverage, but it doesn't actually have the affordability or these kinds of things to connect. So Lesotho, Rwanda, etc., 95% internet connectivity. Lesotho, only 25% internet penetration. Rwanda, less than 15% internet penetration. So these are really demand side constraints that we're seeing that need to be addressed from a policy point of view. And just to show the kind of impacts of this during COVID, we did horrible, awful, I hope I never have to do them again, representative phone surveys in Nigeria and South Africa, because we couldn't do our face-to-face surveys. And in fact, the pandemic actually widened inequality. So despite the sort of broader discourse on the expansion of e-commerce and all of these kinds of things during COVID. In fact, in these two countries that we looked at more closely, but we're now doing a full after access survey, and it's becoming clear from the after access surveys as well, is that people actually were unable to digitally substitute, and we've broken it down in terms of accessing grants and doing all sorts of other things. But the benefits were really for those who were already online. So we got in South Africa, we got more bandwidth, and we were able to do that. But we were unable to bring more people online during the pandemic, despite various government interventions, which, because they weren't actually dealing with that, they were dealing with, even if they were trying to deal with sort of lifeline subsidies, those don't really work where you don't have people already connected. Sorry, I'm just struggling to find my arrows. So just very quickly, from the after access surveys that we're doing this year, again, in Africa, unfortunately not across the global south without funding any longer, but across 8 African countries funded by the Gates Foundation. And informal sector micro enterprise survey that's run on top of that, done with the World Bank, and I'll just show you quickly some of that data. But basically, these surveys have been now run for nearly, every 2 or 3 years for nearly 2 decades now, and there's just very strong evidence that wasn't there earlier on, just because we didn't have this kind of demand side data to support the notion that education is the key determinant of internet access. And that initially some of these indexes and these measures, UNDP and other measures, were really looking at primary school throughput and those kinds of things. And I think what your data is absolutely correct, is that we really only get the necessary level of skill, digital skill, at the tertiary level. But that even in a country like South Africa, where we have over 55% penetration now, close to 60% penetration, those who are not online, those 40% are really the people who are look very much like people elsewhere in Africa. And I think my time's up. I'm going to quickly just say that we're seeing shifts now as more people are coming online. Many countries, as I said, still below the kind of 20% critical mass associated with network effects and economic growth and development. But in many countries now, where more people are coming online, the affordability of the smartphone, which was previously the main and still one of the main factors of not getting onto the internet, having access is the cost of the mobile phone. Once one's online, the cost of the data becomes an important determinant of use. But access is actually the price of the phone. And this has implications because of taxes on them and all sorts of other policy implications. But what we're seeing now is, as we kind of get to that tail
end. Can I give you 30 more seconds?
Yes, I'll just finish off this one, and then I'll leave it for you, and you can look at the slide set because there is some interesting data there. Is that it's becoming an issue of awareness now. So we're really getting to rural areas, people who are very poorly educated, and there's actually not even awareness of the internet. And I'll just put these up here for you to go and look at. Okay. But the After Access Survey is able to measure digital literacy in these kind of broad buckets, which is ability to search, security awareness, knowledge of password, ICC familiarity with networks and apps and software, and ICT use. And that definitely there's an association with access.
But I ask that you can hold some of the slides, which are super interesting and the Brookings team will distribute, but we can also come back to them in the Q&A, if that's all right.
Sure, absolutely.
I know there are many more to come. So
for you.
Yes, I know there are many more interesting slides to come. But maybe if I could just turn back to the panel. Yeah, if you could stop and go individually actually to each of the panel members with a question based on their really interesting inputs. And if I could start with you, Leslie. I mean, you made a really enticing comment about agriculture and technology, right? And I was wondering, you said there are actually some innovative experiments and innovative solutions that have been found in agriculture in the countries you worked in. I think you mentioned Kenya, it may or may not be. Could you give us an example of where those solutions have been brought to bear in the agriculture context?
Well, I will actually share with you the actual report that my colleague had published in 2018 for the sake of the audience, but I'll highlight a few things. In fact, last year actually 2 years ago, at Brookings, I had a publication on the digital agriculture as an example of the breakthrough book. And my contribution was about a study of several different countries, one for Indonesia, another on China, and the third is Kenya. And Twiga is one of the example I highlighted as a case study from Kenya. But they're not the only one. I mean, there's about 26 of the AgTech startups that the World Bank, through the interventions since 2018, had been providing the ecosystem to nurture them over time. And these startups ranges from e-commerce and agriculture, in remote sensing, in the areas around precision agriculture. There are a whole slew of them, and then some of them are more intersection of ag tech and fintech. So the report kind of illuminates a lot of these examples. Now, another country I just want to highlight is Indonesia. Now, having spent a year here physically on site, but I supported Indonesia from Washington, D.C. for a couple of years throughout the pandemic and designed a data hackathon for agriculture here. It is a huge, vibrant ecosystem. And why is that so? It rides on the wave of the fintech revolution here in Indonesia, and then followed by some of the demand side on agriculture transformation, such as e-commerce. We feature quite a few interesting ones in my report to talk about the business model, the 5 business model in agriculture, where technology has a significant impact in terms of drawing out the innovators that contribute to solving the problems in agriculture, and how governments can play a significant role to invest in digital infrastructure, such as colleagues have mentioned about digital identity, in some cases about farmer registry, and in other cases about the digital wallets and platform to facilitate government to people subsidies and transfers of funds during COVID. I mean, there are many examples that I could go on and on, but I wanted to kind of give you a flavor. It's not just in Kenya.
So in agriculture, sorry, just a quick rejoinder.
Yeah.
In agriculture, do you think there's the equivalent of a technology gap that effectively suppresses productivity in agriculture in Africa? I mean, if one thinks of what you meant, remote sensors, drone technology, all of that that's now embedded in agriculture. Do you think there's a catch-up for sub-Saharan Africa that could increase productivity in agriculture?
So there are, I would say I wouldn't comment on every countries. There are some countries that I spend more time in now, Ghana as an example, and Togo. I think there are opportunities that we can uncover in terms of use cases where data and digital innovation could really help address some of the challenges in agriculture. I think that's when you really get into the nitty-gritties on what's the role of the government, what can they play in terms of providing these kind of digital public good, and then what's the role that they can do to catalyze innovation, to bring private sector along, and then creating these platform and ecosystem. So I would say, instead of just talking broadly about the entire Africa region, I wanted to mention that just a few countries that I spent some time looking into the ecosystem and the gaps, I find that the potential is there, but it takes time to build the foundational layers and also investing in these digital public good. Great,
excellent. Cecilia, so what struck me was the immediate question about, I mean, the excellent work you're trying to do in getting sort of African skills sold on international markets, if I could simplify it, right? So my question, but you said it's difficult, right? So my question is really, to what extent, in your experience, do you think it's a function of, let's say, a true skills gap in the way Zakir and Jabu presented? So the prevalence of a skills gap. So in other words, we can't really find enough Python programmers in sub-Saharan Africa. And to what extent is it also, or rather, a sort of information asymmetry, as economists would call it? So the fact that, there's a Ghanaian coder, well, not to simplify it, but many of the corporates in the north wouldn't know where Ghana is on the map, right? To what extent is it soft skills that may be missing rather than core skills? So just a reflection on that in your experience.
Thank you, and a very good question. We have been reflecting quite a lot in the board and with the investors on what is actually going on. How can we lose companies that want to hire from Africa and we just don't find them? Is it because maybe it's too much competition in West Africa and other countries such as Mozambique and Senegal, where we know that the developer population is increasing about 10% annually? Or is it really just the fact that there is just not enough people? I think it's one, just it takes time to develop from the bottom up to the point of being equally good as international standards. Number two, I do think that there is competition and the bigger companies are coming down, the Googles, the Meta, the Microsoft, they are on the ground setting up campuses and really trying to reap the benefit of good African talent. I do think also that the good people leave. So if you are a very experienced Python or Angular or C++, and you have the possibility, you will take the flight to Canada or to the Middle East or to the UK, and you will rather be there as a senior programmer than being on the continent. Maybe you go back, maybe you send back home help, and maybe you continue to train, but I think that that's part of the problem as well. So I think it's a mix of not enough supply, and the supply that exists leaves. It's a time difference here. Competition is coming down to the major markets, Kenya, Nigeria, Ghana, South Africa. One should look more in the other countries, but less so maybe not enough information, because I do think Andela was, I guess, one of the bigger platforms that came down and said put African talent on the map. So I think less asymmetry of information from international companies, but more relocation and time to develop.
Yes. So then, and the other thing you sort of spoke then on about, well, we can only do so much as corporates trying to sort of create the match, right? The between demand and supply, if you have a massive infrastructure gap. So tell us a little bit about that. I mean, so that's an interesting bridge to the report, because that's what Zach and Jabu have shown, that as a weight in our what we call our digital vulnerability index, infrastructure is the big weight, and of course it is the necessary condition, right, for producing coders and so on. If you don't have the infrastructure, if you don't have cell phone towers, and you don't have ISPs that function, you don't have the bandwidth, and you're in trouble. So tell us a little bit about that, and to what extent that's been a challenge for you.
Yeah, the only problem that we have had is actually infrastructure. So the people that works now sitting in Nigeria for US companies, the only complaints we get, it's not about the skills, it's not about the level of proficiency, it's not about the teamwork. It's actually, they don't show up because Wi-Fi didn't work, or Wi-Fi all of a sudden generator broke down or something. So that is a problem. And it is also a problem when it comes for us to actually finding the good people, because you have interviews and you can't reach the people. So that is a problem. And I do think that one should do, and what I think one should do in partnership with governments, is really subsidizing Wi-Fi usage, having hubs with the relevant infrastructure where people can come and work. There are a few in Nigeria, Yaba specifically, but they're all very crowded. So more initiatives like that to really solve for that problem, because again, that problem we have with the talent is really the Wi-Fi connectivity. Yes,
great. So let me move on to you, Landry. I mean, you made an interesting and intriguing point for me as sort of a structural transformation person. You mentioned the role of services, right, in growth. And I was just wondering whether, in terms of leveraging technology for growth, whether you think there's a role for, and just based on what Leslie said, almost for technology to be embedded in all key sectors, agriculture, manufacturing, and of course, services. And how do you think that can be enabled in Africa?
Thank you very much, Aaron. So perhaps before going there, I want to just highlight quickly in terms of agriculture, which was discussed previously, that the potential for 4IR and emerging technology, digital technologies to on the agricultural sector is extremely important, especially in terms of earnings, improvement of the earnings of the farmers, but also in terms of reduction of poverty, in terms of environmental benefits as well. And that connects to the question that you have just asked, Aaron. So when we should not be thinking about technology, about emerging technology, or about digital transformation as a specific sector. So I think that we should be thinking about it holistically, as you mentioned, from a structural transformation perspective. In fact, some of the characteristics, the scope, like virtually all the sector are affected. In a way or another. So of course, you have some areas or some sectors which are more affected than others. As I mentioned, the service sector, for example, is the area where we have more transformation. And Aaron, you have been extensively involved in industries without smokestacks, in the industry without smokestacks project, and which are quite attractive because they have similar characteristics as traditional manufacturing. They are labor intensive, they absorb a high quantity of moderately skilled worker, the exportability, the tradability, and the relatively high productivity. So service sector, yes, extremely important impact in job creation, in skills and transformation of the sector. Agriculture, or also a lot, although may not have the same impact in terms of quantity of job created, because agriculture is already, but could improve the income or the revenue. And we have in manufacturing, so it's also another key area where the dynamic will be slightly different. So I mentioned on one hand the industry without smokestacks, but on the other hand, smaller scale production for domestic and regional market could also make a monumental difference in, although I don't like too much using the word substituting, but let's say in producing locally, in creating those local, those national, those continental value chains. So those will be very important. And there, I'm not too concerned about jobs because first, it's not even enough jobs in those areas or in those sectors. Everything still need to be created. So the question of substituting capital for labor, destroying job, for me is a secondary question. And for this to happen, for all that transformation to happen in the primary sector, in the secondary sector, in the tertiary sector, government have to take their responsibility and act with effectiveness. There's a lot I can say. I'll stop here, and we'll probably have another conversation later.
Great, thanks, Landry. That's excellent. I mean, in many ways, it's the solo growth model, right? That sits in the residual, but now the residual seems to be embedded in every part of an economy across all sectors. So, Alison, I had a little bit of a sort of lump in my throat when you said you were worried about the data quality. So I mean, you know, in many ways, Zach and our report, we relied on the World Bank's data, right? Even the World Bank's own sort of technology and jobs report recently. Yes, there were firm surveys, but they relied on sort of aggregate country level data. Tell us a little bit about your concerns around the data quality. Is it about being outdated, or is the coverage poor, or is the quality just poor? Is it some indicators relative to others? Yeah.
Yeah, so Haroon, I actually wasn't being that specific about your data. I was speaking about the problems with, you know, the digital data generally and data in Africa generally, macro data, micro data. But also really the challenges around demand side data specifically, because, you know, we can't get this information from administrative data anymore. We can't in prepaid mobile markets and those kinds of things. So it was really about the data as a whole. And just to mention that specifically the, you know, the digitalization data, the digital indicators that the bank uses is actually the ITU data. And the ITU data, you know, that we work with the IT expert group all the time. I mean, it's they know the problems with this data, and the problem, of course, then is also that it's very often presented at this aggregate level. It really is not very helpful. I mean, so it wasn't specifically about your data. It was emphasizing.
So I understand that, but tell us more. Like,
data.
so yeah. So tell us a little bit more about the data quality issues. Is it? Yeah. It's presented to aggregate, or the administrator. So here's a question, right? Can we turn to key providers in the digital universe, whether it's telecommunications provider, and legislate that they need to provide such data to country governments? I mean, is that a way around it? Yeah.
Yeah. So, Harun, there is some data you could get from them. And certainly, in terms of big data for general policy planning, mobility data for transport planning or something like that, we could do a lot better job. In fact, your proposal around universal service funds, which have disastrous stories to tell across the global south, with a few exceptions, but have really corrupt, not led to rollout of services, etc., might well be better used in a data environment to make the contribution that public data, the private operator data that's contributed to public data that could then be accessed by governments for planning or by startups for creating apps or doing all sorts of things. That might be a better use of that. But just to speak a little bit about the data. So I mean, historically, this indicator data was collected from administrative data, which now simply even the total number of subscribers has been enormously problematic because of the multiple SIM card ownership. So it's only through that demand side data, those really time-consuming household and individual level, nationally representative data that you can go back and model properly because it is representative, that you can get the kind of disaggregated data that demonstrates, the intersectional inequalities that we see. So if you just talk about, as a lot of this aggregated gender data does at the international level, then it speaks about, it speaks about women and men as kind of homogenized groups. And so, we need these interventions to address inequalities, that women experience. But in fact, it's a very specific group of women experiencing those. And it's those women who are at the intersection of being rural, of being, unemployed, or et cetera, et cetera. And in fact, urban women, even urban Black women in South Africa, simply by being urban, have better digital access than a rural African man, Black man. So there are these kinds of, nuances that we really need for policy intervention, because policy interventions that are, really either scattergun, which is one of the problems, but also that are kind of using this. In fact, this descriptive data is actually kind of misinforming if it doesn't actually allow the kind of, nuances and granularity that you need for policy interventions.
Oh, that's very, very useful. Thanks, Alison. I have a few rejoinders, but let me open the conversation to the audience, and we do have some written questions, which what I'm going to do is I'm going to pick out some interesting ones and then open it to the floor, and feel free to dive in if you think you're well placed to answer it. So the first question, which I thought was a very pointed one, is which we haven't really spoken about, but we've spoken broadly about education, is around the role that elementary schools, so primary schools, can play in promoting. So the formal question is in embracing the digital world, but I guess it'll be in providing the anchor for promotion of digital skills. So what role can primary schools play? Anybody want to take a go at that?
Perhaps I'll be happy to let one of our team member, Jabolele or Zahir, unless you want me to jump in. So I'm happy to give you the floor.
Zach, do you want to have a go at the human capital side?
Yeah, so I mean, I do think in the report we speak about primary school and how it's the foundation upon which the higher level skills must be formed later on. So it's key that, I mean, some of it is not even skills specifically. It's about having proper cognitive skill development at the elementary level, which provides the basis upon which to develop the skills that are required to participate effectively in a digital economy. And I think the other thing also that we've mentioned that's important is that it's important for digital infrastructure to really be incorporated in that environment. Because we can talk about digital skills, we can put it in a curriculum, but if those schools don't have access to the infrastructure and they can't actually, it's not theoretical, right? They need to physically be able to know how to engage digitally. And I think I'll leave it there, but I think Landry can maybe expand on that a bit more and add maybe a bit another perspective.
Okay, no, but that's useful. Landry, can I you are a close colleague and co-author on the report, so I feel free to cut in on you. I'm going to ask the next question, which is actually a question for Cecilia, I think, because it's a really interesting one. It is, how can the African diaspora be helpful? And so I guess I would ask you that, Cecilia, whether you found there's an African diaspora in the northern countries that you found has been useful in connecting the continent to northern employers.
I think we are building the entire business model on trying to solve the global tech talent crisis with African talent. So in that regard is really what we're trying to do. Looking at Africa, we know that it's the youngest, fastest growing, flexible, hardworking, highly enthusiastic about international possibilities, really finding them, nurturing them, and solving the big problem that we're having in Western countries when it comes to not finding the right people quick enough, too expensive salary rates, specifically on the West Coast here in the US, and really solving this big challenge with African people. So I think it's tremendous opportunity. But
Right.
There are many things that needs to happen on the ground, as we have discussed. It's the infrastructure, it's the training. It takes time. If Google said it's about, or Google and Accenture in their report were saying 170,000 tech people on the continent, that's definitely not enough to solve the global tech talent problem.
Yeah, I often think, just as an informal point, that networks are so underemphasized, right? So if you had a senior executive who was from Ghana at Amazon, suddenly that opens up a portal to sourcing skilled people in his or her home country. There was another question which we haven't really touched on, which is around mobile money and whether it can play a role in facilitating financial inclusion for marginalized groups. And I'm not sure who would like to take it, maybe Leslie or Alison.
That's the heart of my PhD research.
Okay, go for it, Cecilia, or anybody else. And you can carry on after Cecilia.
I can just say very briefly, because of digital problems, because of lack of infrastructure in the most remote area, because it's it's capital intensive for microfinance or for banks to actually go and invest in the digital skills modules that we teach on the literacy on the continent, on the countryside, on the continent. Using mobile money for financial inclusion it's believed to help. Sadly, the PhD where we actually gathered for a year the data on the ground, it points sadly that it's not helping so well. Not yet, at least.
Okay.
Sorry,
Okay.
and I will stop it there.
No, that's fine. Alison,
Maybe I'll
Leslie?
chime in. Yeah. So
Please.
I'll comment on what I experienced in Indonesia with digital money and mobile wallets and all that stuff. Because I moved from Washington, D.C. to Jakarta almost a year ago. And there's such a vibrant fintech ecosystem. I have about five digital wallet now through different fintechs, for different purposes. But my point to this is that this is one of the entry points for many of the base of pyramids folks who do not have a bank account in the rural communities. If they have access to this, imagine a farmer, a smallholder farmer, having access to a digital wallet. Now he's able, or he or she will be able to access input suppliers, seeds, fertilizers, pesticides, etc., through that mobile account, and transact in such a way that doesn't depend on cash anymore. And then over time, that data will accumulate to create even more useful, meaningful insights about the smallholder farmer, which the fintech and the banks can then be used to really create a better profile on the risk profile of the smallholder farmer, and hence create financial access to these smallholder farmers. Now, this is one of the choking points of many of the informal sector workers, where they do not own land, they do not have physical asset, but with this access to this data, this behavior information, now you have more insights about the risk profile, the ability to pay back the money, and the ability to use that money for productive use. So I find that the direct connection of mobile money or digital money to the base of the pyramid is a clear line of sight for opportunities to help them create more financial inclusion opportunity. So I think this is one area that could be leveraged more in Africa. Kenya did that, but many other countries could really step forward and deepen the impact.
Let me ask you this, Leslie, and then also to draw Alison in, is to what extent, just as a follow-up, are we thinking insufficiently about prices? So in other words, we think about coverage. So let's provide mobile money. Let's make sure there's access to broadband, access to the internet, but actually we're not thinking about relative prices. So if you think of interconnection fees for mobile money operators, or if you think of the price of broadband, so there's some data which shows that internet poverty levels, internet access rates in India and Zambia are the same. But internet poverty levels, in other words, usage rates, are much, much lower in Zambia relative to India, and it's to do with prices. The price of broadband is much, much higher in Zambia relative to India. So to what extent are we not thinking enough about fee structures, about prices? So we provide all this coverage, but in fact, it's too expensive, in Alison's words, for, say, an African female in a rural area in South Africa to actually make use of it because it's just too expensive. So what do you think, Leslie? Is it about just access, or do we also have to think about fees and prices and so on? And then I'll hand over to Alison.
Well, this is a topic that my husband did in his PhD on fintech and financial inclusion. And he talked a great deal about access, affordability, and looking at inclusion and active usage and so on and so forth. So I think I would defer to him for that matter. But from my perspective, I learned through osmosis in the years that he got his PhD that these are key elements, that you have to balance the forces to make sure it's affordable for the people who are at the base of the pyramid.
Okay. Alison?
Yeah, so I think, our data over a long period of time, or over the last decade of mobile money, shows, direct linkages between availability of mobile money and digital inclusion. And that's particularly where we can compare the just extraordinary take-up of mobile money in East Africa compared to other countries that we survey, West Africa and even Southern Africa, where in fact, financial regulatory constraints actually prevented the takeoff that had happened in a almost unregulated financial environment in Kenya. So there was an example of a very effective financial regulation actually constraining this take-up. But even in underbanked communities like South Africa, where there's largely underbanked communities, there has been the use of mobile money, although it's far less than in other areas. I just wanted to also mention, again, it goes back to the basic constraint around internet penetration and take-up. So when we talk about mobile money and the take-up of mobile money that we saw in East Africa, we're really talking about, very basic airtime. So these are not necessarily people with smartphones, etc. So that really is an important entry point for the bottom of the pyramid. These are people who have no other alternatives. They do not have bank access. They do not, they literally had to travel physically with money in their pockets to get to places, to markets, etc. So enormous. And I think there's lots of papers, lots of research on that. This, of course, is quite different from internet-based wallets and things like that, which have a whole lot of much greater value add, and you can begin to build this data around people and get them, safeguarded profiles for credit and for microinsurance and those sorts of things. So the enormous value adds there. But as I said, it goes back to the inability to have a payphone. And then some of the slides that I couldn't show you actually show with our micro enterprise survey that we're doing with the bank is that a large number of informal sector micro enterprises and informal sector people actually have a smartphone. It's a surprising number actually have a smartphone, but actually don't use the internet. So again, it goes back to the demand side constraint. Actually, although it seems like a supply side issue, it's actually a demand side constraint.
Yeah, I think that's phenomenally useful.
Can I just say one very small point?
Yes.
To the individual who asked the question, I published a blog exactly on this topic on the Brookings site. So just Google mobile financial services can increase the impact, but it's more complicated than what we think. The story is more complicated than what we think. It's on Brookings.
Wonderful.
Yeah.
That's a much better way to answer that question. Thank you, Cecilia. Unfortunately, our time has run out, so we have many more interesting questions. There was one on corruption in technology, but we just didn't get the chance to go there. But I think it's a phenomenally interesting one, perhaps one for Brookings to follow up on as a part of a research agenda, the sort of technology opportunities that we have available. But from my side, if I could hand over to the director of AGI to see us home, if that's all right. But this has been phenomenally useful. I think there are a couple of lessons about infrastructure, about education, about pricing. I keep on coming back to that, about regulation in the digital universe that we really do need to resolve and unlock for sub-Saharan Africa. And I think, again, back to my introductory comments, if we don't talk to the level of detail that's required, whether it's about what regulatory fixes we need, or whether it's about quality of coding schools, I think we're always going to be back in this environment talking about the grand challenges rather than the specific fixes. But let me stop there and thank you all for attending, and hand over to Lucius if he has some final words of thank yous to say to the audience.
Arun, thank you. Thank you very much, the entire panel. It's really been a privilege to have you guys discuss what is clearly a very, very important topic for our continent. Alison, Cecilia, Jabu, Zakir, Leslie, of course, Brother Landry, and Christopher, and you yourself, Arun. I would like to really, really, on behalf of the Africa Growth Initiative at Brookings Institution, thank you all for making the time to join us today. Thanks to the staff of DPRU and staff of AGI and our Brookings colleagues in communications who have made this challenge of navigating so many continents and linking us all up to have this brilliant conversation. Of course, without our audience, we wouldn't be here. And I really, really, a sincere thanks and appreciation for the audience who stayed with us throughout this session. Thank you all.
Thanks, everybody.
Thank you.
Thank you.